Get to this topic that we're discussing, and in terms of what lies ahead for the market. And Vijay, let me bring you first, because as I said, you control the state of Hormuz here. So, I want to understand, the SEBI chief was here, and of course, whenever SEBI chief comes, the hottest topic of discussion is what's happening in F&O, what's happening in F&O versus cash, what are we doing more to sort of dissuade people from F&O. Are we seeing some kind of structural shift? In the last 3 or 4 months, have we seen a bit of a shift back to cash market from derivatives market, or am I reading the data the wrong way?
Yeah, good morning everyone, and thanks Anuj. Strait of Hormuz, I've been thinking. I hope I'm not seen as someone who's a stopper.
No, you're seen as someone who's most crucial in the demand supply.
Crucial is all right, but right now the Strait of Hormuz is associated with being a stopper. So I hope people see me as a constructive, safe infrastructure platform provider and not really a stopper. So, controversial introduction, but nonetheless, my 2 bits.
No, I didn't mean that. If you felt that.
No. On the lighter side, yeah. So I before I get into the derivative parts, we had that very interesting discussion on the recent developments. I just thought I'll add my 2 bits. To me, it's one and straight. I think clearly people are fed up with what's on the table. They want something fresh. They want something new. I think that's a big message for me. Now, how does it impact markets? It is to be seen how that new stuff on the table is going to actually perform from a development point of view. But whatever was happening, I think people were fed up. I think that's clearly a signal. You talked about markets and the recent developments, and particularly on the F&O side. I would say that little bit of history deta hu main, so that we get a perspective there. Many years back, before COVID, I think Indian market was already a cash market. 3% of volumes were, way back in 16, 3% of volumes were F&O. And then COVID happened, and that was a time when, in a way, a structural change was happening in India, with new age brokers coming in, making things cheap, easy access, a number of self-styled influencers propped up, the market gurus, they gave advice, low cost, people entered, and we saw the market growth. I was just tracing back the numbers. 21, this number was about 8 lakh crore, jumped up to about 16 lakh crore, and finally, at its peak, a year and a half back or so, it crossed 5.34 or something like that, trillion rupees on an ADTO basis, the volumes. Since then, I think some of the measures that we've seen has really had an impact. I think rightly so, scaled back volumes. Volumes have come to about 250 trillion rupees now on an ADTO basis on F&O. So certainly it's reduced by more than half. So your point on data, I think you're probably reading it right. At the same time, cash volumes have started going up. We've seen the cash volumes now at about 1.3 lakh crore on an ADTO basis. I think both these signs are good from a market's point of view. The developments that are taking place on the tax side, the STT, as well as the developments that have taken place from SEBI side, more margins, increasing the cost is making the investors think about entering in a more informed, more measured, more considered manner. I think the nudge is clear. Wealth creation happens through disciplined long-term investment rather than speculative short-term trading. So some signs of it. We hope that the market continues to move in this direction.
Oh, absolutely. Now, Sunil,